Welcome to the Xceptional Insights podcast. I'm Sean Wargo, and I'm joined by my colleague, Peter Hansen.
Hello.
Together, we make up the market intelligence team here at Avixa,
Where it's our job to identify trends in the economy and understand how they affect our industry, the professional audiovisual industry.
Hello all, and welcome back to the Xceptional Insights podcast with Sean Wargo and Peter Hansen of Avixa. We're back to talk about the experience economy. We had teed up over the last several podcasts the notion that our industry is growing at about $100 billion over the next 5 years, and that all the experience components of the economy are powering our growth. So we're going to start a little bit with the context. What is the macroeconomic context that's providing this opportunity to us as an industry, Peter?
I'm going to take us back to the very first report we wrote in 2020 after the pandemic had started. The question we asked was, what happens when you have these sort of cataclysmic events? And that had us looking at the Spanish flu. It had us looking at the Great Depression. It had us looking at research about tastes and how they change over time. Are they durable? Do they get affected by the events that people live through? And all of that research really told us that they're steady overall, that when you see different behavior in, say, the Spanish flu, the 1918 flu, it's a product of the fears and incentives and possibilities of the time, and that once they leave, the way people behave afterwards is quite similar to the way they behaved before. So that led us to, in most vertical markets and most segments that we analyzed, to say post-pandemic is going to look a lot like pre-pandemic. The one exception I will say is we identified, not for taste reasons, but just for barrier to entry reasons, that corporate office market was ripe for change. We said that it was April 2020 was that research was like, kind of flashing, saying like, hey, the reason that companies were not remote, a lot of that is a kind of barrier to entry. They hadn't figured it out yet. So once they're forced to, that could be durable. Versus everything else, and especially live events, was like, it's not some barrier to entry. Oh, we haven't figured out. It's that people love these immersive experiences being together. The quality of the AV is really not replicable at home. So we felt a lot of confidence in saying that post-pandemic, we're going to see the experience economy come back. Now, I would say if you kind of compare what we've observed to what maybe I thought in 2020 at the time, it's been slower. I would say that, I think part of that is a little bit like, it's even hard to say the pandemic is like fully over now because people still get COVID. Like, it's still an issue that matters. And I think that, probably it lasted so long that folks are still a little nervous and maybe like a little bit more aware of the dangers from like public health perspectives. Being in person, we're like regaining our comfort, but I believe in it. I think that research was overall correct, and I really think we're seeing it now. What's standing out to you about what we're seeing in that return to experience economy? Do you see it as vociferous? What do you see going forward?
Yeah, I think if we think back to pre-pandemic even, the bar had been raised for us already. The need to meaningfully differentiate one experience from another, attract audiences. We're competing with, even electronic gaming, all sorts of online experiences, even pre-pandemic, right? With good audio quality, good video quality, 4K resolution, high-end sound, all that sort of stuff. So I think consumers had already started to expect that when they were going to a concert, a venue, a stadium, a sporting event, all that sort of thing. We'd seen it in the screen wars in large stadiums. How big a screen can you put in?
Yeah.
AT&T Stadium for a while had that actually, that honor, I suppose.
Yeah.
So we'd already seen that gauntlet.
The arms race.
That's right, the arms race for displays. So we'd already seen that gauntlet thrown down. I think so. You go into pandemic, people retreat from events. For health reasons, for concerns, for actual just shutdowns.
Yeah.
And now as we come back, it's luring people back out, certainly, but it's
Mhm.
also competing against all sorts of other experiences. So
Mhm.
I think that's a big driver here. It means that Pro AV is well situated in it for sure. And our
Mhm.
data is certainly showing that live events, performance entertainment are two of the biggest areas of growth. And that's a part of this story
Yeah.
of venues, facilities, investing more.
Mhm.
And so I guess the question becomes stickiness and when does the demand get released? I think that's something we've been seeing in our data too is companies were waiting, rightfully so, for the audiences to return, for revenue to return, for debt
Mhm.
to get into a meaningful place, interest rates aside,
Mhm.
but before they started investing. And that's kind of what we're hearing as well
Yeah.
from the market.
I'll make one more related macroeconomic point before talking slightly more directly to that. One is that the macroeconomic point is that in the pandemic, the way the money has shifted, when it went away from experience economy, it went towards goods. And now we're seeing goods really struggling. I mean, we saw some of like the most peak pandemic things like Peloton struggling, and that was already like late 2021, 2022. But even now, for example, uh, helping my girlfriend purchase a new road bike. And it was like, this is the first year since the pandemic that you could actually get a sale on a new road bike. And in the sphere, like there are companies going out of business right now because goods were huge in 2020, huge in 2021, falling off in 22, and now 2023 they're not coming back the same way. And that sign right there is like, if it's not there, where is it? It's the experience economy. So I think you're seeing those stories coming through in goods, and they're not maybe as clear in experience. But I promise you, if it's the money's not there, it's because it's over here in experience economy. Now, the one part and why I say, okay, like maybe it's not so clear in experience economy yet is these companies were hammered. If you ran live events, 2020 was ghastly for you most likely. 2021 was a hard year. 2022, the revenue probably came back pretty strong, depending on exactly what aspect of live events you were in. But you're in this financial hole. And so what we're seeing right now, and this comes through, I think, very clearly in our industry sizing data in IOTA, is companies are getting their balance sheets back to where they want it to be,
Right.
rather than spending with the normal kind of like revenue to spend relationship is not 2019. It's we're going to take more revenue and put it in our pockets, which I think is like that's probably just good financial management mostly.
For sure.
Yeah, how exactly is that translating out through our industry sizing in IOTA?
Yeah, what we've seen is obviously 2019 peak, really bad year for 2020, recovery 21, great growth rates 22. What it looks like right now is the two core categories that we're talking about here is part of experience economy, live events, performance entertainment. Looks like those recover in about the 2025 timeline. The thing that we would urge, as you're kind of talking about, is everybody's on a different sort of rate of recovery cycle. And so investments can end up happening sooner than we might expect for certain companies, for industry at large. In fact, every time we've done revisions on IOTA, we've ended up pulling forward a little bit of demand. We'll talk about 2023 a little bit and sort of the challenges that have happened for that particular year. But by and large, every year has been a forward revision, pull forward the demand and maybe trim a little bit off some of the outer years. And so that could be the case here. So I remain optimistic that a full recovery certainly is within the next 2 years, if not the next year for these categories. And recovery, by that, what we mean for Pro AV's sake is that investment starts to come back into our market. It's integration projects coming to fruition. It's purchases made on new kit, new technology to support live events and fixed install, all that kind of stuff sort of finally playing itself out.
And also, I mean, I think one thing we can see a little bit in the numbers is that some of the services are recovering maybe a touch faster, and then the hardware is a little slower. Not so much because they're not necessarily spending on hardware, but they're like a little shy about maybe the highest end or pushing out just 1 or 2 years of replacement cycle.
Right,
Now,
absolutely.
You mentioned
just to touch on that real quick. Yeah, so rental and staging is the part of the services that we really attach to a live event spend, and that has been an area where we've seen the most recovery. So you see the spending on the staffing to strike and
Right.
set up and all that sort of stuff first. Then, as that improves, of course, we have underlying wage increases that make a profitability story a little bit more challenging.
Yeah.
But what we start to see is the demand for the hardware then follows.
Right.
The kit gets used up. It's running through its usable life, and so the next wave of investment really is in the hardware. But I did want to affirm that certainly for us, rental and staging spend is where we saw a lot more growth and continue to see it at a robust rate.
Yeah.
Yeah.
And now another aspect, and this is related to something you were saying about how it's not everywhere is fully recovered. Some places are beyond recovery. Are some very public, very prominent experiences that are driving huge revenue.
Yes.
And maybe folks are already guessing what I'm talking about. I'm talking about the Taylor Swift concert series. I mean, the revenue numbers on that are insane. $1 billion, and like keeps adding tour dates. It's all this year, all next year. I mean, the prices are crazy. And then the other one is the Sphere. It's adding tour dates, for the initial show. The prices they're able to charge are insane. When a Vic's posts about it on social media, it does great numbers. And I see both of these as kind of indicators for us as market researchers. Say like, hey, look, there's the demand here, that demand that we kind of always thought was going to be there, like, here it is. And then as well, I think investors are seeing it and going, yeah, it is back, isn't it? Like, people are willing to spend a lot of money when it's cool. And one way that you're always seeing it, Madison Square Garden built a Sphere in Las Vegas. They're now planning one in London. We'll see if it comes to fruition, because those things are very difficult. The Las Vegas one's $1 billion in debt. Second one could probably build a little cheaper, but it's like, whew, like borrowing is expensive now. So we'll see how it goes. And there are a lot of challenges, but I see that as just this overall positive indicator in terms of demand. Also, probably draw for investment and not just this is what I'll ask where you stand on what you see about this. But is it only the big, or the big kind of like the public, the headline news, and it's also kind of true and going to percolate down through the small? What do you think?
Yeah, it's a great question, because the project scale that we're talking about certainly can be out of reach for, say, a small to mid-sized integrator. And so you look at the Sphere, you look at big stadiums, you look at transportation projects that, there's some experience economy stuff in there too.
Right.
It can be a hard and very competitive landscape of project set to go after. It's a project that any integrator would love to get a piece of course, to be a part of that mix and prove out their capabilities for future opportunity. But I think what we're talking about here is not just the big and flashy. I think it's also this as a driver for us as an industry. It's the notion that experiences need to step up their game in order to win their audiences. And so how do we do that? How do you do that in a smaller venue? How do you do that in a quick service restaurant, in a hospitality venue, in a more local stadium? So those types of flagships, though, are the inspiration that then trickle down. I'm also even hearing about, we talk a lot about corporate office space, and one of the ways this may be playing out for corporate too is hospitality kind of meets corporate. So you could even say that this sort of thing inspires how do we redesign office space to attract workers back in, what kinds of things, not that we're going to have a Sphere-like work office, though who wouldn't love something like that? But I think the notion is there of inspiration to attract people and encourage people to come into a space, use a space. So I think that's what it's all about. And that's what gives me long-term confidence in this and upside potential for it. We talk about $100 billion. We talk about 5.6% compound annual growth rate over 5 years. We've asked the question, is more possible? And as you look at things like this, you start to say, maybe it is.
Yeah.
Right. Maybe this is me glass half
Yeah.
empty, or glass half full, as always. But I still think it's a key driver.
Yeah.
Yeah. What's your take long term?
Yeah. Well, you mentioned that it's especially the high end is a difficult space for integrators to compete in. Um, and one aspect of these experiences in general that I wanted to mention, and it relates to what growth can you achieve in the next 5 years? Like the overall, if you're like I say a small to medium integrator, really even our biggest integrators, like they have such small market share compared to the total size. And if you compare it to like a tech industry like search, our integrators are tiny little guys,
Right.
even if they're $1 billion revenue company. So the growth that you can achieve is really it's kind of up to you, obviously up to your competitors, up to the competitive landscape. But how can you compete in this market? And I would say that one challenge that really stands out is can you keep it fresh, right? That an immersive experience is really cool, but it can be a flavor of the month pretty easily. So whether you're working on the Sphere or you're working on something really small, really local, I think, and maybe this is a place where that term managed services comes in. But like, how can you help your end users make sure that it's something that keeps driving revenue? All of these types of experience are going to have an upfront cost. Even if it's not $1 billion debt that you have to pay off. The success of it is not going to be that first run necessarily,
Right.
but the second, the third, the fourth, the fifth. Can you refresh the content, make the technology continue to pay itself off? So I think that's going to be a challenge and a place where these integrators who maybe have done one or two projects before, talk to an investor who's maybe like newer to the space or like has some ideas. You can be that differentiate yourself by being a great resource to help them keep whatever thing you design, whatever system, whatever immersive area, keep it fresh, keep the stories coming, keep the newness of the content to drive that long-term revenue.
Yeah, for sure. We talk about exceptional experiences, the marriage of three things: space, technology, and content. And so I think you're right. There's something in each case. The space is the hardest to change over the short term and even long term. It requires more investment. Technology, though, absolutely monitoring, remote service, rental, AV as service, that sort of thing has a lot of potential for it. Even data analytics as an extension, content as service.
Right.
There's clearly a lot of opportunity here. It is a part of our forecast that is the most bullish. We're at about almost 9%, 8.5%, I think, percent growth for managed services expected over 5 years. But I'm with you 100% on that one. Is where, as we look at even things like AI coming in that we've done podcasts on as well, that to me is a potential accelerator, a way in which organizations, integrators can start to get a piece of that managed service offering.
Yeah.
We talk a lot too about IT AV convergence as a driver here, and I think what helps the managed service story is the buyers changed. And a lot of these larger organizations, IT departments are kind of owning the procurement, and they expect those kinds of services. They're used to it on the IT side. So all that lends good fuel for what you're talking about.
And managed services has the biggest value when you're changing regularly, right? When it's like we build out the conference room and then it's the same before we refresh in 5 years, the logic of managed service is not as good. When it's we create this experience and then it's going to have its run after 3 months and we're going to need a new one, that's when managed service is really valuable. So that's really why, it's a tough nut to crack, right? Why do we keep bringing it up? Why do we bring it up here? It's because this is one of those places where it's not going to just be a single installation and then you just use it for 5 years. People are going to get bored of whatever experience you created. You have to refresh it. And you said space probably given. Technology, that's where the integrators come on. Content, that's the question area. Like, can you really marry those two and help the flow between technology and content be really good? I think that's where there's a lot of revenue, a lot of growth, a lot of opportunity, and I think that managed service creates that flow probably in the most effective and efficient way for an end user.
Yeah, and clearly full integration, full vertical integration across those three areas within an integrator company would be a great desired state. Not possible for everyone, but I think the key to this, the marriage of those three things, is good partnerships. It's creative hiring. Yes, kind of picking opportunities. As we talk about exceptional experience economy, to me that's the key of this. Is as a community, as an industry, we've been mostly focused over the years on two primary places: higher ed and corporate. Those were our bellwether, our bread and butter. That's where a lot of the revenue honestly still comes from. But all of this is telling us, as integrator community, boy, we need to be paying attention more to the markets that we wouldn't necessarily have thought about as much. And that could be retail, could be hospitality has been more of a logical extension for companies in the past. But certainly venues, events, there's even play in this for government, military. So I think that's the idea. I will come back to a concept you and I hammer on repeatedly, especially through pandemic, is diversification.
Yeah.
And I think there's diversification within a market you're serving via things like managed service and additional offerings, but it's also, where are there other solution area? Where are there other markets that we could go after to get a little bit better growth rate as we go forward? As you look at portfolio of business, certainly what our forecasts are clearly showing is conference and collaboration, a great bellwether, but not growing as fast in investment as something like these experiences. So just a note on how to stay diverse and how to grow business as we go forward.
Yeah, that's maybe a good note to end on. Just that 5.6% is the 5-year, but this experience segment, it's in the IOTA numbers. I think it's in lots of more signals of where you look. Like the 5-year is better there.
Yeah,
part of that's because we're starting small. We got hit hard, but it's pretty positive looking forward.
Yeah, for sure. 7-8% wouldn't be unlikely.
Yeah.
All right. Well, this has been a great podcast, exceptional Insights podcast about exceptional experiences and experience economy. Join us for the next one as we get a little bit more pragmatic and talk about what's happened in 23. How does that translate into 24 to give you kind of a sense of where we're ending up this year and going on to the next. Thanks so much, and look forward to seeing you on the next Exceptional Insights podcast.